Welcome to Building Business Credit. Presented to you by Edge Corporate Services, your funding source for all stages of business. And in part by Patriot Business Funding and GoToro.com. At its core, business credit is similar to personal credit. It represents your business's ability to borrow money from authorized lenders based on previous actions. Personal credit, used to evaluate everything from your readiness for another credit card to the interest rate for your mortgage, is linked to your personal information. All contributing accounts are held in your name and with your social security number. Business credit, however, is linked to the business entity with a separate tax ID number. Once you establish business credit, a change in your personal credit history, like a foreclosure or late payments, won't affect your business credit and vice versa. How personal credit is built. The first step is applying for credit. Second, the applicant is approved for credit that reports to the credit bureaus. Thirdly, the credit is reported and trade lines are established. Fourth, as multiple accounts are reported, a credit profile is established. Finally, due to the trade lines reporting and the establishment of a credit profile, enough information is, at this point, available for the algorithms to formulate a credit score. Now let's look at how personal credit starts. A person who has no trade lines reporting has no credit profile or score. So, if this person were to say, go to a bank to try and get credit card, car loan, mortgage, or any other type of financing, their credit would be pulled and show that there is nothing reporting. Due to this lack of credit, they would be denied financing. All types of financing. If the same person walked into a store and applied for credit, they would again be denied for the same reason. A complete lack of credit. But, if they were to get a secured card or two, and wait until those accounts reported, then they would have reported trade lines, an established credit profile, and an established credit score. Business credit, like personal credit, is something to build before you need it. Of course, if you're considering starting a business, emergency savings is important to have, but there's always the chance that something might not go according to plan. At some point, your business may need access to credit to cover unexpected costs. Think a sudden rent hike or cash flow issues. So you don't want to wait until you're backed into a corner to apply. Just because you have an IN does not mean that you have established business credit. Just the same as you won't have established personal credit simply because you have a social security number. So, if you go and try to get cash credit using your IN with no credit established, you will be denied every time unless you have excellent personal credit and used it to get approved by supplying your personal guarantee of repayment. This is why so many people fail to build business credit. They apply for the wrong type of credit first, get denied, then convince themselves business credit is worthless. If you apply for credit with stores or banks and have no credit established for your EIN, you will be denied for financing. To make the most of your business credit profile, to ensure that it is as strong as can be, you must make sure to start with the proper foundation to build on. There has to be a certain number of certain types of lines reporting in a specified order, starting with 5 vendor accounts, then revolving, then unsecured, is the best way to begin. But none of this will matter if the trade lines don't report. Every highly successful company in the United States has and uses business credit. This is exactly why they are able to achieve such a high level of success. For example, has a high credit limit of $50 million reporting right now with the 3 major business credit bureaus. But they too had to begin the process and follow the same steps as anybody else to establish their business credit profile. None of these guys were personally guaranteeing their business debts, and any person who has experience at the helm of a large-scale, multinational company will ever say that it is smart business practices to do so. If the billionaires of the world don't do it, then why would you? It's a common misconception that people have about big companies, that they can get credit just because they are big. But the reality is, the issuing of credit does not work this way, and never has. These entrepreneurs got the credit without a personal guarantee because their company's credit is solid enough to stand on its own. The real key to getting business credit is to establish a solid credit profile and score that can stand on its own, so you don't have to supply your social security number. So, where to begin? You can start with vendor accounts with personal credit. You are able to use the help of a cosigner and get authorized user accounts reporting to help establish a credit score. But cosigners and secured accounts aren't really popular with business credit and will not help. Business credit uses vendor accounts instead, which typically offer terms like net 30 instead of revolving. So, if you get approved for $1,000 of credit on a net 30 account and use it all $1,000 will have to be paid back within 30 days. A net 60 would have to be paid in full within 60 days. Unlike revolving accounts, you have a set time you must pay back what you borrowed or the balance of the credit that you've used. So, to start your business credit profile the right way, you need to get approved for vendor accounts that report to the business credit reporting agencies. Once you've done this, you can then use the credit, pay back what you used, and the account will be reported to Dun & Bradstreet, Experian, or Equifax Business. Then you have trot lines with your vendor accounts. Using your newly established business credit profile and score, you can then get approved for store credit, and then eventually cash credit, without needing to supply your social security number or providing a personal guarantee on the debt. This is possible because now your IN profile is established and can stand on its own, so if you leave your SSN off of the application, the credit issuer then pulls your IN credit, sees a solid profile and score, and can then approve you for real revolving credit. One thing to keep in mind when building business credit is that not all retailers will approve you just because of your business credit rating. Some places, like Home Depot, have additional guidelines like minimum length of time in business that they factor into their decision as well. And some require a minimum monthly revenue. There is a certain order to follow the correct path to establishing business credit. Once you understand the steps of the process, it becomes pretty straightforward. Follow this order and get your profile started. Once you do, you will begin to see that one credit source leads to another, and then another, each issuing you more and more credit. When you have 10 or more trade lines, the real benefits of business credit start to become available to you. Establishing your profile is the hardest part. You will need a total of 5 payment experiences reporting to business credit before you can get a score and then qualify to be approved for revolving store cards. 5 is the magic number. We will discuss the ins and outs of payment experiences and much more in our next, upcoming video. Without people like you, we would be nothing. So, thank you, from all of us at Edge Corporate Services, Patriot Business Funding, and GoToro.com for taking the time to watch this video, and most of all, thank you for your business.